Hello, traders. In the continuing series of From Start to Finish, I wanted to touch base on this particular trade. So, this is a trade that literally was only put on yesterday. This was put on as an iron condor in SPY, and it's currently up about 13%. So, what happened on this trade was this was put on, but it was put on in a skewed way. It was put on when the market was up here around 445 or so, which meant that my premise, and if you don't recall it, go back and look at the prior video. The premise was that if we take a look at our chart on SPY, was that we were at a point of resistance. And while we could have continued to move up, and that would have required adjusting that position, I felt the more likely path was that we would go down a little bit, possibly down into this 435, maybe even as low as 430 range, something along those lines. So I was expecting a pullback. I didn't necessarily expect it to be this much this fast, but that only worked better for this particular position. So what might we do with this position right now? Well, first of all, let me just scroll back here to current day time so you can see our T0 line here shows that we currently have about $82 in profit in this trade, which is 10, 13%, something along those lines. And usually that's all I'm really looking to get out of a position. If I can get 10 to 13% in a day, that's kind of considered a gift, and you take it and run. That said, I'm going to show you an alternate way of doing this. So if my premise now is still that, yeah, the market might still pull back into that 430 range or so. So I'm okay keeping my risk down here because I have an opinion that I don't think we will get down there. So again, I'm okay keeping that risk or keeping this put spread on. However, I might want to consider taking some of the risk out of the upside of this trade. So if the market does rip back up, I don't go into a losing position. Essentially, I'm going to work to flatten this T0 line. I would like it to, stay higher now and not have upside risk, because again, my opinion is that we're from here maybe more likely to chop sideways or move back up. So the proper way, or the best way, in my opinion, of doing this is to simply roll this wing in. So to do that, I'm going to come in here and I'm going to sell to close this position. Now, keep in mind, we bought this for $3.20. We're selling it for $1.77. So this is going to be a little bit of a loss on this particular position. But at the same time, this short one has gained in value significantly. That's why we have profit coming into this trade. But here's what I'm going to do. I'm going to go ahead. I'm going to sell this to close. And we've done that. Now we have unlimited upside risk. Okay, well, we obviously don't want unlimited upside risk. So we need to come in and we need to add a call. In this case, we're going to buy a call, and let's figure out where we want to buy that call. So we can see the dashed line that we have back here. That would be our new position if we bought a call at whatever price we're going to put it at here. So you can see what it does also to my T0 line here. Depending on where I put this, it dramatically flattens out that T0 line. This can put me in a situation, again, if I want to look at my deltas here, I'm slightly positive delta now. Well, I don't know that I want to be positive delta. While we might go up, I think we're more likely to maybe chop sideways and or possibly go up a little bit. So by skewing this a little bit like this, and again, you might not have delta on yours if you're using the totally free version. You may need to upgrade for this, but it's well worth it to get this additional information to help you in looking at your positions. So let's just say that I'm okay with this. It's slightly negative delta. What's really great about this position is that the market can drop all the way down here to, 422, somewhere in that range. I mean, if we look at our chart, that's all the way down to here. I don't know that I see it dropping all the way down to there. And if it does, there's solid support in that general area. So again, it's nice to have that path, if you will, to the downside. still in this trade. And by doing what I'm doing right here, I've taken out all upside risk. So no matter how high this market goes, I'm at least going to pick up a few bucks here. I'll pick up, maybe $5 or so on the trade if the market rips back up. But if the market stays right here and decays a little bit further, let's just look and see what happens. Okay, so let's look specifically at the dark green line. So we can see that that just raises higher and higher and higher. And as it does so, it doesn't have a massive amount of risk if the market rips up. And it actually gets a little bit better if the market continues to pull back. So this is the type of position that I look to work my trades into personally. So again, I'm going to come in now and I'm going to add this trade. Let's see, did I sell to close? Oh, I guess I already purchased that, did I not? Let me pause here just a second. Okay, so yeah, I'm not losing my mind. I had hit the buy button here and have that position. So now let's just take a quick look at this and see what happens. So we have theoretically five different positions or five different strikes. Of course, one of them was closed. So if we look at that closed position, that was that long call that we closed out. We bought that for 320, and then we sold it for $1.76. So that's a loss. That's a $144 loss on that specific leg. But again, we have to look at our position holistically, and we have $226 in open profit in this position right now. So the combination, and this is our new position, of course. So the combination of those two gets us to that $81 profit where we're at this point. So again, right now with this really nice flat T0 line, I don't feel like I'm under any real pressure now to do much with this position other than just kind of let it decay where it is a little bit further, and maybe get the profitability up into the 15-20% range, somewhere along those lines. So anyhow, so that's going to be my game plan, is just let time decay on this. And if we get a little more of a pullback as time decays, I may be able to squeeze a lot more out of this trade. But I only try to squeeze trades like this when I can do them with a higher probability. Again, the fact that I have no risk of loss to the upside now is a big factor to me in keeping this trade open. And yes, I do have risk to the downside, but again, my market opinion in looking at a chart on SPY is that I think it's highly unlikely that we'd get down here to the 422, 423 range. Of course, that does not mean it won't happen. I just think that there's going to be strong resistance here at the 430 or support at 435. There's going to be more strong resistance here at 430. I say resistance to go lower. There's going to be support at these points, at the 435, at 430, and then again down at about 422. So there's a number of levels of potential support here that would have to be breached before this particular trade would get into downside trouble. And again, it won't get into any upside trouble. So that is an adjustment in this SPY trade. Again, I recommend everyone is paper trading this and just kind of see the mechanics that go into this and how OptionStrat can help you in modeling all of that. So as always, please hit the like button down below and subscribe button. And if you have any questions or comments, please put them in there as well. I try to respond to all of those also. So thank you so much, everyone, and take care.